In Trump trades, the dollar's surge is a strong narrative playing out compared to the broader and cross-asset performances. Besides the knee-jerk swagger of Bitcoin's rise to raise past $90,000, the long-term story is bets in favor of the greenback. Amongst the dollar's G7 peers, the euro is now projected to take a big hit. Take a look at this next report to understand the big new bet by currency market analysts.
After the U.S. election, currency experts are reworking their predictions for the euro and now predict that they will fall towards dollar parity. That is a U-turn from months when many were raising the outlook for the common currency. At least 10 institutions have lowered their euro calls in the last week. Bush and Pictet Wealth Management are now calling for the euro to hit parity with the dollar. Options wagers reveal that traders like betting against the euro. Trump's America First agenda and global tariffs are driving the dollar higher. The currency on the other side of the exchange rate, the euro, is being hurt by extreme political and financial chaos in Germany. The country is known as the growth engine of the Eurozone. But Germany's economy is slowing, and now the political fallout is weighing heavily on the common currency. The currency market is shifting in response to speculation that Trump is likely to plank his economic agenda. The expected trade taxes would harm Europe's export sectors at a period of political instability in its main economies. As a result, many investors are abandoning the euro. Single currency has already fallen about 3% since triumph, approaching its lowest point this year. Mark McCormick, the global head of FX and EM strategy at TD Securities, expects the euro to fall to $1.03 by the time Trump takes office in January. He said, "This is the worst-case scenario you can think of for the euro." McCormick added that the parity is absolutely in play. After that, as the red wave scenario increases, the risks of getting to €1 equals $1. Hedge funds and other leveraged investors are already hedging their bets for a lower euro in the 3 years leading up to the last week's referendum, and their holdings have undoubtedly expanded since then. Bets for a weaker euro by hedge funds and other leveraged investors were already hovering around their biggest in around 3 years in the run-up to last week's vote. Positions have ballooned since Trump's landslide win. However, not everyone agrees with euro-dollar parity calls. Some analysts are not convinced that the euro will fall as far as parity. Amundi points out that the market is already heavily tilted in favor of a weaker euro. Analysts agree on a stronger dollar bets, but are skeptical about parity calls. Business Bureau Report, WION World is One.
For latest news, download the WION app and subscribe to our YouTube channel.